Hi guys, thanks for tuning in to another episode of Nuggets News. Well, a monster week, Bitcoin, stock market, it is all happening and we've got so much to get through. It's been our biggest ever month once again at Nuggets News, so thank you to all of you. None of this is possible without you, and we did hit the 100,000 subscriber mark last month, which was one of my goals for the year. We did that without any, clickbait or hype. World is ending every day titles, as a lot of people do, and I think that's really attracted a really quality subscription base. So I mean, credit to you guys. We got up to number 25 in the Apple Business Podcast ranks this month. Plenty of views and new subs, but for us it's really about the newcomers coming into the space with the education side of things, which I'll touch on in just a second. 5 new hires this month, including 3 full-timers, so that meant we've already had to get a new office in Melbourne, and I hadn't even been to our new office that we got in March because of COVID yet. So I'm still down here in Tassie looking forward to meeting a dozen new staff now. You might notice an automated chatbot on support now that can answer all the basic questions, and we're continuing to integrate AI into that and get it better and better with the most commonly asked questions. And our new valuation reports. So these days we've got our gold and silver reports, macro reports, our crypto fundamental analysis, so the spotlight report. We've got our knowledge center for all the basics, as well as the glossary for all those words and terms that you might not be familiar with. And we are certainly adding to those and taking all your requests. So our goal is to be the number one crypto education site in the world for beginners and for experienced researchers building a portfolio. Speaking of portfolios, there's lots of exciting things happening in that front on the crypto world, which I'm going to get to in just a second. We also welcomed another partner on board this month, Traveller, letting you spend your crypto on holidays. I know we all want to help get the Australian economy going again. These guys let you spend any one of your favorite cryptos down the bottom. I think there's over a dozen now. As well as bigger discounts if you do use their token, the Traveller token. So whether it's local or you can go all over the globe when those borders do reopen, these guys, I think they even might price match or guarantee that they will be better with all the discounts as well. So look, that is a win-win for you guys, getting up to 40% off everything and getting to travel around, get the economy going. So one other thing I did want to mention, with your friends, there's so many scams resurfacing again. Every day, more than once a day, I hear about people that typed in their private key. Now, the ledger emails are a really common scam at the moment, or text message. There's been a lot of data leaks or hacks on the internet. So there's people out there that have all your information, your phone number, even your address sometimes, and obviously your email address as well. So they are targeting those people, and they know what exchange that you're on. They know that you had a Ledger hardware wallet, so they'll send very specific emails saying, urgent. They'll try and rush you. These are the techniques that they use. So I might do a whole video about all the common scams, but so many people do fall for these because they are well constructed, because they know so much about you. But guys, rule number 1 is you never ever type that private key, that backup phrase, those 12 words online. You never share it with anyone ever, okay? There's no exceptions to that, apart from when you're installing it yourself, the first time on your own computer and you're doing it, and that's offline, okay? You should never be giving that information out to anyone. And anything that even seems the tiniest bit suspicious in crypto, it's a scam. It's always a scam. So guys, I keep drilling that message in, and hopefully it does save a couple of you. If you are new to the collective shift to our new platform, head over there, guys. Check it out. There's plenty of free stuff, as well as the pro content. So all those resources and those new reports come under all the member research there as well. And we're excited to add even more going forward. I think I forgot to mention there the NFT and gaming reports, which will be coming out with Maddie. So there's just so much happening. I absolutely love it. I hope you guys are enjoying the content. And the final thing that I want to mention, and I'm going to show you the full preview at the end of the video, is our launch party in Decentraland. Now, this office, this space, whatever you want to call it, is 4 stories of goodness. Like I said, I'll let you have a look around at the end. But we do have that launch party coming up. The tickets for that are a premium ticket for all future premium events that we hold. And we're also going to have a bit of a, I think, Christmas party or some sort of get together for those people that do get those tickets. So half of them are sold out, half left. I really want to look after those people and do something special because it's been an amazing year for those people that support us. This goes towards paying off all the development team from Decentraland who we hired to do this job urgently before Christmas, and they've done a fantastic job. But I'll let you check that out at the end. The link down below for those tickets, and there's also a link to join the Facebook group where we'll put out updated details. Okay, into the local news. So housing insanity in Australia. Once again, we're just seeing everything from, should we let young people dip into their super? How can we give out 5% first home loans? It's just more and more of this keeping the bubble going without a focus on so many other areas that we should. And it's going to come back to haunt us. And I think what we're already seeing is other countries pivot. So much about the pandemic has changed the way we live. Particularly property. And in Australia, if all those CBD values go down a lot and more people move out to rural urban fringe, the suburbs, it's really going to even things out and bring those prices down in the city. And people that pay top dollar, the apartment prices in Australia, I was reading, are about $300,000 over other cities, comparables, simply because of the premium that we place on property. Now, a recent survey showed the majority of Aussies would welcome a universal basic income, and I think that's because we do spend 30, 40%, some people, of our income going towards things just like our paying off our mortgage for 30 years. So much of our entire lives and wages are soaked up with property compared to other countries. Now, finally, we've got these conversations. The PM is talking about a pitch for Australia as a fintech hub, but I just don't think that works when you've got our encryption laws. Startups aren't going to come here if they're not allowed to have privacy and encrypt their app, and they can get a tap on the shoulder saying, hey, give us a backdoor, give us a key to everything. The cost of living is quite high. Not a lot of startups want to live somewhere that's one of the most expensive cities in the world. So look, I'd love to see Australia create more tax-free zones, or at least lower tax marks for the startups. First couple of years are really hard, no matter what industry you're in, let alone tech. So I just think at the moment we are not really that great a place to have a tech hub, but at least they're starting to think that way, which is a positive. All the big companies in Australia, or hundreds of them, are paying no tax. And this is the ATO's latest corporate tax transparency data. Another thing that I think all countries are starting to really wise up to, how can it be possible that these big corporates just pay very, very little, where most Aussies are paying, like I said before, a real decent chunk of their wage. Once you take out tax, property expenses and cost of living these days, you actually find on paper you're left with very, very little for yourself. And I think that's where people feel the pinch, and I would love everyone to have more. And if people do have more, they go out and spend it, don't they? They go to the cafes, the restaurants, they go and do activities. And so there's nothing wrong, I think, with changing where we're directing our income. But at the moment, way too much is going to the banks and property. Now, this is something that I also predicted, the Aussie dollar jumping to a 28-month high. So during the capitulation in March, I said that, hey, that's probably going to be some sort of interim bottom here because we had that bloodbath. But I was also talking about the RBA are just too nice, too gentle, too reactive instead of proactive, and they're now very much behind the eight ball in terms of the rest of the world and their money printing. And it's kind of funny that even though Philip Lowe's now started to talk about this massive QE and how they're going to keep rates low forever, this is the big gravity pull, as they're talking about here, where all these other central banks are going down this path of super low interest rates. They're doing their QEs. Some of them are now doing the private sector asset purchases. Japan are obviously buying shares and ETFs as well. So Australia's still playing relatively nice ball, even though we're doing 100 billion of QE compared to everyone else. So our dollar is going up. And just about everything that Philip Lowe said would never happen, 0% interest rates, QE, negative rates. Well, we've actually got the bond market starting to price in negative rates in Australia for the first time. At the Treasury auction this week, $500 million of sales, and the first note traded with a negative interest rate on it. So we're going down the same path as everyone else. And here you can actually see 3rd November, was when we announced that QE. And since then, lo and behold, the Aussie dollar has just been climbing. So even though rational thought would say, oh, Australia is starting to print $100 billion, that's diluting their currency, it's not as bad as what everyone else is doing. They're going to be one of the strongest or least weak currencies out there. Now, we've also had a bit of a tailwind, which we'll get to in just a second. But a lot of the language from the RBA is changing to, she'll be right, or we're just doing that anyway, completely backflipping on other things. So this is another example that Afterpay here, the benefits are outweighing the harm. That's the language from the RBA. So rather than saying, you know what, we've got record household debt, this is just another way for people to get into debt. And it's normally the low income, a lot of low socio-economic areas that fall into these traps because they don't think that, it's just all these small amounts that will add up and then they can't pay it off. And once again, they're just sort of saying, well, as long as people are spending, we don't really care. We need the economy to get going. We don't really want to think about all the debt that they're in, and that might be bad further on. It's all short-term thinking. We've got an ex-Citi, ex-Deutsche Bank Australian heads to face the cartel. So this is another example of our bankers and that mistrust in that system. The Royal Commission, and still nothing has really changed. Now, over the ditch in New Zealand, they have had property bubble like us, but their Reserve Bank is now starting to talk the opposite way than ours. Rather than saying how easy can we make conditions, let's try and work on these loan to value ratios. Let's put some restrictions in place. We've got to try and cool things a little bit, whereas at the moment we're just trying to inflate things as much as we can. So like I just mentioned, commodities have been that other tailwind for the Aussie dollar. Huge demand around the world. Iron ore miners are going gangbusters, gold miners, all those other precious metals or rare earths as well. The big problem lies if we are heading into this commodity super cycle and things keep getting worse with China, can we find enough people to buy all those other commodities from us? Because our biggest buyer at the moment is just one by one are looking for ways to blacklist more companies. And these are the sort of excuses, the behavior, but we all know that it's just a bit of a tit for tat at the moment. Export bans on timber industry. What else did we have this week? So one thing we do want to mention just quickly is China have gone foot to the floor on their credit impulse. So sort of like their QE. And they've got their FX reserves soaring the most in 7 years. So Beijing are starting to intervene here against the soaring yuan. Similar problem to Australia. They don't want their currency getting too strong, just because their economy is going okay at the moment compared to everyone else. So they're going to inject so much money into their economy and get things going. But the problem is we're not really going to benefit from that. So at the moment, as Alex Joyner is saying here, we're more concerned about these trade tensions and what commodity or good are they going to whack some tariffs on next. But it's the big picture, everything we spoke about in our documentary, that should be the focus. So think about things like education and tourism, other forms of investment. We're kind of going to lose all of that if sentiment gets really bad between the two countries. This was the other one, beef as well as the battle escalates. Now, another battle that's going on is with our social media giants. So once again, there's two languages here from the Australian government versus the private sector, and Google and Facebook, they've been put through the ringer here with it's not fair on our media companies. But they're so big that 9 have turned around and actually opposed opposes the concessions for Google and Facebook. I misread that. I was of the belief that a few of our media companies, from what I've been reading, conversations I've had, they're actually not for these crackdowns, because if Google and Facebook turn around and say, well, that's fine, we just won't deal with Australia at all, that's actually worse for them than trying to get that little bit of money that they're probably owed. So in some ways, it's a lose-lose here. And 9 is on the other side of that argument, but I did want to bring that point to your attention, both sides of the argument there. So we've also got the FTC suing Facebook. These monopolies in all industries, the FANG stocks, have just become so big that no matter what they get dragged in front of Congress for, they're always going to get away with it. The lawyers are going to fight it tooth and nail. Like I said, Australia are trying to make them pay for our news outlets and contents, but I just don't really see them being able to win that battle. And if they do, they can just say, well, we're a private company. We don't have to serve your citizens in your country. We're just not going to allow that anymore. All right, so another bit of friction between the US and China has actually come to fruition this week. So the Nasdaq is going to remove 4 Chinese companies from the indexes after a US order. And this is where Hank Paulson is coming out and he's talking about the US at risk of losing their dominance. So think about all the other countries that would be licking their lips if the US keep making enemies and delisting shares. Someone like Switzerland will come along that's neutral and say, hey, we'll guarantee that we'll always list you and this, that, and the other. Would maybe do a newer technology, a better system, blockchain-based trade 24/7. All these things are possible. Whereas I think the US are just acting like there's no other alternative other than them and going around as the world police in some ways. I do want to mention here in terms of the Apple Store, we've got these riots breaking out in India, unpaid wages. Like we touched on earlier on, these big corporates that pay very little tax, sitting on hundreds of billions of dollars on the balance sheet, and we're hearing stories like this, low-paid workers, unpaid wages, inequality to different degrees all around the world at the moment is seeing these temperatures rise. US telcos ordered to rip and replace the Huawei components, another example of just saying, let's get rid of those microchips, we don't want anything to do with China. A lot of those wages and workers, if we go down that path, they're going to be in China. And although they might have been underpaid, I'm sure a lot of these people would prefer to have a job than no job at all when these sort of things start to pay out. Again, government in their ivory tower making these rules, but they don't see the real people, the grassroots of where it has its effects. So the Apple CEO is saying that a lot of staff are going to return to office at least June. We've heard these stories over and over again. New York office space for rent hits its highest level since 2003. Goldman Sachs has gone to Florida. More and more are just saying, you know what, guys, work from home. This is absolutely smashing, obviously, corporate real estate. Huge risk in the CLO sector, those collateralized loan obligations, those junk bonds. And also private real estate here, small businesses. We've also seen that a lot of the rules have been put in place for them, but these small businesses in New York City only account for 1.4% of the COVID cases. And you probably saw those clips going around social media. Why a lot of the big chains are allowed to stay open, but for some reason a small business is worse? No, it just does not make sense. More and more people getting angry and protesting, and it's going to continue until we get a little bit more equality. But I think just common sense. Like, it's not hard for people to make some decisions that are fair on everyone. But another thing that's been swept under the rug a little bit is, I know the total number. I've spoken about how I'm not too fussed about the cases per day because that doesn't matter when we're doing so much more testing. The figure we want to focus on is, the hospitalizations, the severe cases, and the deaths. And the US is now at this point 3,000 people a day. That is more than 9/11 every single day. And I just think a lot of people are completely oblivious to the point that this is even happening, or it's got this bad, or this is not just one day, this is every single day. So much different to Australia. We are very lucky at the moment. And this, I guess, if you do the hard yards and stamp it out, you get a little bit of a benefit. But in the US, it's going to be a massive, massive headwind that they are facing, trying to convince everyone to have this vaccine. I'm always nervous to say it because the algorithm is going to not show this video. But anyway, so Australia had to terminate this trial because a lot of the patients were showing up positive for HIV. Now, they knew this was a risk, and it's to do with how the tests actually measure viruses. So none of these people actually have HIV, but it's just the way the test works. And although this was the case, the trials were actually showing that they did work. And it was simply the public perception. This is what they're saying, the reason that they terminated it all. Because all the conspiracy theories, if this gets out that, oh my gosh, there's a vaccine that causes HIV, imagine all the headlines. They can't risk that. And that's almost too far the other way. I feel a little bit sorry for them if they had something that was good and worked, and they're so worried about that side of things now that they're just not going ahead with it. But that's I guess if you believe them. And so, as I said, now our chief medical officer has the privilege to come out and say that, there's no real need this year in Australia. Now, that's completely at odds with what other countries are facing at the moment. So Pfizer had theirs cleared in, I think, record time. A bit of a landmark here. Markets were a little bit of a buzz. Consumer sentiment rose on this news. But I think the reality is that you're going to face up against, I don't know the exact stats, but it wouldn't surprise me to say half of people in America are going to push back against this to some way or another. It's certainly not as simple as what a lot of politicians are thinking. The big fallout from all of this, though, is the loss of our freedoms and privacy, and stories like this. What's it mean for facial recognition and technology? Canadian Health Minister and plenty of other countries are talking about these immunity passports. Private companies saying you're not allowed to fly unless you've had the jab. I don't think that you should be able to enforce that sort of thing on people at all. And we've now got the vacuum cleaners that are spying on private conversations. It goes without saying that the big techs are spying on us, but every little device now is monitoring you. The election isn't over either. I was on Twitter before and I saw some of these, what's the hashtag, stop the steal, I think. There's still hundreds of thousands of people out there barracking for Trump, the election's rigged, saying these types of things. So no end in sight. I think, was it Hunter Biden also had the first lot of allegations put against him that are going to go further. I'm not sure exactly how it all works, but I mean, there is obviously something there. So it's still a little bit simmering, although the markets, you just would never know it, would you, at all-time highs. Now, Trump did sign a one-week spending bill averting a government shutdown, so I absolutely love this. I think most of you will have heard me say before, I love the debt ceiling, and every year, every 2 years, there's a big song and dance about how they're going to hit this ceiling, and then at the last minute, someone signs a bill. There's literally no point of having this debt ceiling when you just go a few trillion past it every time. MassMutual is pushing for these relief checks rather than jobless aid. Think about some of these figures that we need to get, even just public schools back to reopen safely. $22 billion. But it's the K-shaped recovery where the wealth, the rich have just got so much richer, and it's very, very clear now that the people at the bottom end of the spectrum, the vast majority, are getting worse. So initial jobless claims jumped up again. This is the highest figure we've had since back in March of people for the first time coming in and losing their job. So it is not getting better in the US. It is getting worse. Ominous signs, number of Americans that have begun stealing just food for survival. We speak about Argentina and these places, and I guess stigmatize them a little bit, but you wait until your kids are hungry and you've got no roof over your head and see what you'll do. And that's probably already coming to some parts of the US where there is already homelessness and whatnot. But with the economy getting worse, jobless rate going up, it's going to spread. UK economy loses steam, more damage yet to come. Still fighting over this Brexit, no Brexit. I can't believe, how many years has this been going on? Was it 4 since the actual vote, and 5? Anyway, I just don't understand. This is like a divorce that just drags on. In terms of why the Europe stimulus is such a good deal, I think they're looking towards China as an example with the credit impulse, or maybe Australia. Hey, look, they've done heaps of QE, they're going good. The US has done trillions of dollars. Look at their stock market. That's kind of the attitude now. And sure enough, the ECB came out this week and surprised everyone with more QE. That is what you do. Doesn't matter if it hasn't been working, you do more of it. So they are increasing their bond buying programs, the money printing. Just as I said, where China's credit impulse is going. Finally, we've got a central banker talking some sense. So the Swedish central bank governor has slammed these explosions of QE, and he's given his 6 reasons why. All of these things that we've spoken about before. But remember some of these countries like Iceland's that did the reforms and got rid of all the crap. And we need more of that attitude. Japan announces a new COVID stimulus. What have we got this time? 73 trillion yen. They've been doing this for 30 years and they're just going down the same path. Bank of Japan is now the biggest holder of stock, so they've got $434 billion of stock. So does the Swiss National Bank. They've got heaps of all these tech stocks. I think the Swiss National Bank are one of the big candidates to buy some crypto first, as well as all the sort of middle tier governments and central banks. EU leaders are agreeing on this carbon cut, 55%. I think we're going to see a lot of spending on renewables. If it creates a lot of jobs, I think that's a plus, even despite what you think of climate change. Portugal's 10-year bond has also dropped below zero. It's a virus that just spreads. And now we've got Joe Biden starting to talk about the cracks that we're seeing in the US economy. He's saying $900 billion to fix it. Think about when we first started having this conversation. It was one, and then it was two or three. Another 3 months into it, and I honestly think that the US, to get back to where it was, we're probably talking $10, $20 trillion higher, the Fed's balance sheet, and it's going to take 2 years, 3 years. Argentina talking about more wealth taxes. Governments are going to get desperate as well. They are the economists that come out of school and they're taught that way to think, and they wonder why their models don't teach them. They keep missing all these crises. But it's the same for governments around the world, where they are told that they've got to run these balanced budgets and whatnot, and so they've got to look for ways to get money, and there's only so many ways they can do it. They're going to look to tax the rich. A lot of times the rich are just going to flee to these other destinations. The thing that frustrates me as well, though, is we're currently being told more and more ways how you've got to spend your money, and we're going to this cashless society where everyone will have to have a bank account, and then everyone has Visa, MasterCards. But what happens when they tell you that, we don't like that industry? And this was actually, funnily enough, one of the cryptocurrencies, Verge, made a comeback and had a pretty good run because they've partnered with Pornhub, and Visa and MasterCard have decided that they don't want to let people pay for that sort of stuff anymore. We've also had a 100 million, whatever the national currency here is in Kenya. So we've got a Nigerian man that's trying to deposit this over at the central bank in Kenya, and he's been caught. These are just the desperate measures people are going to. We've seen the old gold bars up the rectum and all sorts of things. And it's gonna, we're gonna look back and just laugh on this stuff in this physical money world when everything else we do is digital. Here we have a great chart of margin debt and free cash flow balances. What you can see here is the massive amount here of the debt that we have in the system. It's really scary when you think about the tale of two, companies. We've got rich and poor in the real economy, but also on Wall Street. So you've got these companies like the big tech stocks that are completely cashed up. Percent of cash as total net of assets. These are at record highs. You think about Apple that have got enough cash on the balance sheet to almost buy every crypto out there, and then you've got all these others that are in record debt. The number of stocks or companies that are zombie companies that can't even pay off the interest or their expenses is up around, I think, 15-20% at last count. So that's those two extremes in financial markets as well as the real world. Airbnb, this was their first day of trading, so it's now worth more than the three largest hotel chains combined. It jumped 143% on day one. And this is all just a side effect of too much money. None of this would be possible or happening if the system wasn't absolutely flooded, if the banks didn't have huge reserves that have been pumped full of QE and they can give that out to their mates. So Warren Buffett's indicator is in the nosebleed section now in terms of valuations. Short sellers have just been smashed. No one is game to short the market, so there's no downwards pressure on price or fair price discovery up and down. It's only up now with buyers. More and more of these exotic ETFs. So there's now an ETF for US equity, an IPO ETF. Any flavor you can think of, there's an ETF for it these days. Insider selling has stayed very, very high. So those insiders are sitting on huge profits, but also just because they can. A lot of the time they're issuing new shares as well. And we've got this mystery around these flow of funds. I'm not sure how we can not know where $7 billion is, but compare that to the stories of the black budget that we hear about, or this one just this week. This is the group overseeing $10 trillion Guardians for Inclusive Capitalism has signed a partnership with the Vatican, and we all know the stories about how much wealth that they have, and don't pay tax and whatnot. So I think often people forget the stupid amounts of money that are out there, whether it's 10 trillion, for the Vatican to have a bit of a play around with, all these billions that are flowing in and out of different ETFs. We saw those record flows from growth to value last week. And this is all about my theory that I've been talking about for a couple of years now, the race for real things. So we've got water futures now. Think about on every planet out there, we look for water for signs of life. All living things need water. And now water is a commodity. And we see it in Australia where the farmers have got rivers running through their property and they're told you're not allowed to touch that water. This is going to happen in everyday life. You're going to be told that you're not allowed to collect the rain off your roof and you'll get a fine for that. Okay, you'll have to buy fresh water. It'll be privatized. Big corporates will own it, and that is a very, very scary thought. When is air next? You joke about it, but you try telling your grandparents that water was going to become a commodity owned by the private sector. This is so much wrong with our system. Needs to be changed, but that's the way it is at the moment. 18 trillion, we've got a new record for negative yielding debt. That was another one of our predictions. We would pass that 17K all-time high this year, and Bitcoin would get to all-time highs when that happened. So, hey, Bitcoin's chopping around on my other chart here. I think Bitcoin is going to blow through $20,000. If we don't have a sort of a black swan, grey swan event, which I'll talk about just shortly. But you can see all the inflows, different assets under management. This year, we know a lot of people went to cash initially in the crash. Big flows into all the techs, and then gold was a huge winner. We don't have it on the balance sheet here, but Bitcoin cryptos have been the best performing asset sector once again. And Bitcoin, I think, it will be in these conversations and these charts as of next year. It is going to become a proper recognized asset class on Wall Street. And more people are recognizing what you and I recognize, whether it's the RBA, whether it's the ECB or the Fed. These guys have just got this perfect backflip routine down pat. Remember when they said that QE is necessary and we're only doing it because we need to support the economy until it reopens and we have the vaccine? Remember how great the US economy was and we're only dropping rates and we're only doing QE because of this? And now we've got the vaccine, the economy was starting to reopen, but they're saying we're not even considering raising rates in the next few years, and we're not even considering reducing QE, which is bigger than at any time during the financial crisis, even though we've got a vaccine and the economy is reopening. So that is, wow, a perfect 10 on the backflip there. This is their biggest start to the year. I think it was a stat, was it $100 billion they had spent in the first 2 weeks? Whatever it is, we are on target for way bigger than last year, possibly towards a $5 trillion federal budget. So Bank of America and a lot of central banks now foot to the floor, but if you told someone this stat, would they believe you? Bitcoin is a $300 billion market cap asset that can absorb all this funny money or funny value, intangible wealth, because it is finite. $1.3 billion every hour is being printed. Okay, let that sink in. 24 hours a day, 30, what's that, 100, these are just staggering numbers. And what we have started seeing this week is more people talk about the rush to real things. Epic commodities boom, it's coming. Everything's gone digital, and now people realize that, hey, you actually need food and places to live and people to do things and produce things. You don't have the tech sector without all of that. Now, like all these different commodities, none of it is allowed to boom until Wall Street and the players that be can make profit off it. So now that they're ready, now that JP Morgan have been shorting silver into the ground for years and accumulated a heap of it, then we see silver go up. Now that all these different brokers and whatever are happy with how much commodities they own and the systems they've got, and they've got enough ETFs, okay, now they're going to start the bull market, and they've already made $1 billion trading commodities, and a lot of these others will make money off the fees. Wall Street doesn't lose. And there's actually stories about banks, I think it was JP Morgan, that didn't have a down day for a year. And that's not trading or investing, where good investors are right 55 or 60% of the time. That's just a rigged system. Remember, it was exactly the same with marijuana stocks. They were allowed to boom and weed became legal once Wall Street could make money. I think we're probably going to see it with uranium. We'll probably see more ETFs. We've already had a good little run lately. Not quite there yet, but depending on the leadership and the geography, I think we're going to see uranium come back into flavour in another sector. Money's going to flow into the few sectors that are left. Gold has been absorbed and hoarded by China and Russia for so long now, and this is a case of central banks. This is very quietly at first. So the money printer was only going brr, very softly as China and Russia are buying up all the gold. But now more and more people are saying, hold on, we need tangible things. So modern economies are just way too overvalued and intangible, and more people are going to start using the money printer. But this is going to happen in the government level, probably central bank level. We've already seen Iran acquire Bitcoin. But it's this private sector that's just going nuts at the moment. We'll talk about it more in the crypto section, but I wanted to show people that only watch the macro section how important this is. A private company is issuing debt, issuing junk bonds or notes, convertibles, whatever you want to call them, but they're issuing debt to buy Bitcoin. And they proposed this, and then a few days later they did it. And I think they raised $650 million in the end. They bought Bitcoin. So this is a perfect example of the Fed can flood the system with money, but people are going to choose to actually buy real things now that money has basically just become free. And they're going to get that inflation that they've been trying to get. And careful what you wish for. I think we are just going to see massive spending in government, like I said, solar, silver, name your commodity. They're predicting oil to go up now. They're just going to go crazy. More and more assets are just becoming highly correlated or higher correlated than previously, because money doesn't have to flow, out of the stock market to go into bonds or to go into commodities these days, and then you'd see a negative correlation. These days, there's just more and more money, and it just goes into more and more things, and everything kind of rises together. What you are going to hear, though, is more negative connotations around crypto. So, look, the ransomware, the drugs, the terrorism, all that sort of stuff, it's going to keep coming up. But I just think it's too far out of the bottle now. You can't put the genie back in. This is a 169-year-old insurance business that have bought $100 million of Bitcoin. Now, it's a tiny little fraction of the billions of dollars they have under management. But I think that percentage is obviously only going to grow from there, which is a positive. So here comes the attacks. I did actually specifically predict this would happen this year, that governments would, under the guise of terrorism, and there's no evidence for this at all, but apparently France need to stop crypto and Bitcoin because of terrorism. So, hey, they're one of the people that are pushing really hard for these new rules, the KYCs. You might have heard a few of these different terms we'll get to in just a second, but the World Economic Forum wants to standardize ethical data collection so they can all share the data about everyone around the world. FinCEN, they're encouraging banks to share customer data with each other. I'm not really sure how that goes with privacy laws. If you work at any bank, you can look up anything about anyone you know. Don't know about that, but Putin has ordered public officials to report their crypto holdings. We've seen that in Ukraine, and we've actually seen politicians disclose $24 million in privacy coins. So, look, is that dodgy, or do people deserve privacy? All of that is being brought into question. And there are rumors going around that this week the US are going to roll out these really strict rules. The FATF, the travel rule, you might have heard it called, AML and KYC, having to collect information on the sender and the receiver before you can even leave an exchange, whitelisting addresses. Look, it's completely pointless. As soon as you withdraw to your address that you've whitelisted, you can send it to another exchange or another app or another address. None of it makes sense, but the US is going to absolutely kill innovation, and people are going to go elsewhere. This is huge news for privacy coin advocates. They've already lost a lot of exchanges, but they're actually starting to trade at a premium, like a lot of black and grey markets. So good news, I guess, if you're a privacy coin investor. And something that I got wrong, I didn't think that would happen. I thought they would go down in price, but they've garnered a premium. US lawmakers are telling Mnuchin to back off from these potential changes. They're trying to sneak this through their last couple of weeks in office, and Mnuchin's got all these mates on Wall Street and all these bankers. I'm not sure, Trump's got his loans and a lot of bankers and whatever. So maybe these two are trying to do them a favor. The banks are trying to kick crypto and kill it. I don't think. Look, I'll say why they still can. It would slow it down, but I don't think it would kill it. We've got crypto-friendly CFTC chairman looks to be resigning early next year. We've got like Janet Yellen from the Fed going into Congress now. So it's just a little bit of a worry if they're setting this up to attack crypto. But more and more of these businesses, Paxos is the latest to get a federal banking charter. This week we also saw another private company. I might get to that article in a second, but this is the Stable Act, another new villain in the world of crypto. So Rowan Gray's talking about anyone that issues these stable coins or touches a stable coin or even allows the transmission of a stable coin. So running a node might be illegal on Ethereum. Like, none of this makes sense. They just don't even understand the technology. So it's great to see plenty of advocates coming out against it, because stable coins have benefited people in those developing countries the most, as we know. CoinSwap, they're looking to test stronger Bitcoin privacy. We've got all these other upgrades coming, Schnorr, Taproot, more and more privacy upgrades for Bitcoin, but also Ethereum. So Uniswap is looking to bring back this anonymous trading feature. And the central banks are not only scared of the privacy, but scared of these coins that have probably already had this lead that's going to be hard for them to catch, even if they make it compulsory for people to use. So this is what it's all about. It's a negative, blah, 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 it's bad. We know how good they've been. They would look, the crypto and the stable coins wouldn't have taken off like wildfire if they weren't brilliant at what they do. Visa wouldn't be using Ethereum and stable coins if it wasn't better than the current systems. Crypto startup BitPay, this is the other one that's looking to become a federally regulated US bank. Apparently, Bitfinex and Tether are going to have all those loan documents for the New York Attorney General in a couple of weeks. So that might finally put to bed all the Tether rumours that Simon Dixon and I spoke about in that interview the other day. Spain's second largest bank will soon launch crypto services. India's banks are once again serving crypto exchanges and traders. That is a big positive. Coinbase has seen this huge growth in traffic, 158 million views in November. This is what the banks are seeing, the fintechs. But we've also Silvergate, so a huge crypto incorporated bank. Their shares tanked as board members were dumping. Now, I'm not really sure what's going on here, but I think more and more people are realizing that, even if you integrate crypto, it's still kind of a halfway house. Ultimately, the value is going to go to crypto, and you're still a middleman and unnecessary. So yes, JP Morgan have completed these blockchain transactions. They're launching this new product for payments between all the banks and whatnot, but I still think a lot of that lunch gets eaten by crypto at the end of the day. Standard Chartered Bank to launch crypto trading for institutional investors. The list is just unbelievable at the moment of how many people from Wall Street are getting into this space. So XRP had a big week. CoinSpot and many exchanges announced support for this airdrop, so it had a big pump and then a big dump, and that was probably one I got wrong, where I thought everyone was talking about it. It might have been priced in, but it was a big dump after the airdrop there. Sweden are considering whether or not to switch to the e-Corona. Very forward-thinking country. They've got their STO exchange. Look, I do think that they are really going to lead the way here, whether it's security tokens or maybe central bank government owning some Bitcoin. Keep an eye on the Swiss, the old Swiss bank account. This was one that we spoke more about in this week's headline analysis in the premium platform as well. I think it's the first of its kind where a security token has actually gone back to a utility token, and now it's been listed on some crypto exchanges. So a lot of paperwork, a lot of regulators involved, but they've managed to do it. And it's kind of funny because now we've got all the crypto exchanges that are launching tokenized or synthetic stocks. So Bittrex joined the party. We know that FTX have already been doing that, and they launched a pre-IPO contract for Airbnb. And as we just saw before, their IPO listed and was up 140% on day one. So you could have traded all that on FTX exchange. And this is why I love them, guys. There's a link down below if you want to get a discount on signing up. But they are very forward-thinking in everything they do. All right, so Aegis Custody clears this hurdle for a bid in South Dakota. More and more custody, insurance. It's all coming for that big smart money. Circle is doing a big upgrade so they can introduce their digital dollar and bring stablecoins mainstream. Yield. How many of these little apps have we seen? Simplifying DeFi, bringing DeFi to the masses. People don't even want to know what's under the hood about Ethereum. They just want to open up an app and get 5% on their savings account rather than minus 1%. And that's where this is all going. Multicoin Capital led $1 million seed round for Swivel Finance. Again, this is just those fixed rate lending and interest rate derivatives, that yield curve that Raul and I have been talking about. The Biden administration will ultimately be supportive of crypto. So this is what the Circle CEO is saying. Look, I really hope he's right. I hope it doesn't go down that path that I just mentioned. Rari Capital are moving over to the Melon protocol. So these guys are helping build those crypto hedge funds, decentralized versions, bringing all the communities closer and investment closer. Two very cool projects that do complement each other well. At the same time, we've got the Wall Street indexes. So you can build your own in the world of DeFi, and I am actually trying to build a few gaming indexes at the moment. But we've also got, Bitwise are coming out with their 10 index fund. It's not the top 10, it's just 10 coins that they've chosen. But this is publicly traded now. Anyone with a US brokerage can get on board. This is very, very cool. I think we're going to see a lot of money flow into crypto this week, and we're going to get through that all-time high. One thing I just did want to mention, though, was think about all those Bitcoin maximalists that told you altcoins were dead, and I was constantly saying that money will flow into these large cap coins for this exact reason. That's where the products are going to be made. So Secret Network have completed their bridge. They have got, I think the bridge, I want to get them talking to the guys over at Red Fox, because they've got their bridge between so Rootstock and Bitcoin and Ethereum, and then we want to have a bridge over to the Secret Network. They've also got a bridge to, I think, Cosmos, Polkadot. So we really want to start to have all these different networks, in the DeFi and NFT space talking to each other. Our buddy Fuocious, so she sold her art for $21,000, that New York City skyline that Pomp helped commission as well the other day. Rootstock is changing the way that they peg the sidechain and the tokens, the Bitcoin. So I think they've probably learnt a little bit from DeFi there as well. And this is the chain. So Rootstock is the smart contract layer sidechain that Red Fox Labs are doing their stuff with as well. Big announcement from them this week. Mike Novogratz, after I had an interview with him, funnily enough, he and Galaxy Digital, his fund in Hong Kong, have decided that they are going to be investors in Red Fox Labs. So once again, some people giving me a lot of shit on social media for shilling, but this project has already done, I think, 60x since we first did that interview and said that this was going to be a massive project. So well done, guys. In terms of the NFT space, if you're still confused about it all, I did a tutorial the other day. So this was showing you how to connect your hardware wallet, how to use MetaMask to interact with the different dApps and whatever. There's the DeFi super tutorial I did a few weeks ago as well. But this one was a full rundown of if you want to donate to our Gitcoin grant or any of your favorite Ethereum projects, or for example, if you want to buy a ticket to the launch party for Decentraland, this is going to walk you through how to do all that and how to store your NFT, for example. All right, so we're into Sentiment Top 10. This is the top 10 projects, and there was some great reports out this week. So we've got Gnosis at the top of this list, one of our favorite. Mana as well, one of our favorites at number 3. So these continues to be a great forward-looking indicator of some of the strongest projects. Ethereum, this is the Ethereum push notification service. So how often have you thought, would it be great to get a notification when the price hits this, or my stuck transaction goes through finally. So these are a cool little project that have got a bit of funding. So well done, guys. I'm sure that's going to come in handy for a lot of people. Sushi Swap, massive rally. Again, I'm going to continue to talk about this because I copped so much crap for saying this project had good fundamentals, and they are absolutely killing it lately. So well done to the guys at Sushi. And the other one here, this is the Electric Coin Capital. So this is the other massive report that came out about all the developer growth. Go and check out your protocol. If the one that you're falling in love with has got no developers and no development, then don't fall in love with your investment, move on. So great report about the developers in the space there. Averting is preparing for mainnet launch on January 4th. That is certainly one to watch with NFT auctions as well. Space Chain has been awarded a $500,000 grant. So this is a decentralized satellite system, a little bit like Blockstream have got their satellite. I think they've got two now. So when people say, what if the internet goes down or the power goes out? Well, once we've got Nexus are trying to do this as well. Not Nexus Mutual, just Nexus are doing the space satellites and the ground mesh networks. Now we've got Space Chain doing it. I think a few others as well. So there's going to be plenty of crypto satellites out there, so our networks can never go down. IOTA. So one of the founders is out. I think there's been a bit of tension there. I won't go into it, but that was a bit of a unanimous decision at the end of the day. Snowden and human rights advocates have been talking about internet surveillance. So this goes all the way back to what I was talking about at the start of the episode, where who on earth sort of decided that World Economic Forum gets to standardize our data and all these different banks get to decide they're going to share it with each other. It's just nuts, and something really has to give there. Giving away too much of our freedoms. Where were we up to? All right. So here we've got Glassnode. This is an awesome chart. This just shows you all that movement, the year where all that money went from centralized exchanges to DeFi. Very, very clear. Look at the deposits and the withdrawals. People are getting off those centralized exchanges and into the world of DeFi. Music is something that is popping up more and more in the world of NFTs. People are starting to understand that an NFT isn't just a little picture that you buy, okay? It's a ticket, an all-access pass to, beam you up to the VIP room of Nuggets News HQ. It's the contract to, listen to this song or to attend this concert, to see the message that Deadmau5 has given to you with this super rare NFT that they've created. So I know the guys at Red Fox are getting into that sort of space as well. They've started to mention music more and more. But whether it's audio reactive, they're doing a bit of a collab, or it's a new partnership here as well. More and more of these music content creators, or whatever you want to call them, artists, are realizing the power of blockchain, cutting out that middleman. First DeFi project on Cardano bridges over from Polkadot as well. So this is Bond Protect. Well done, guys, there. It is great to see some projects starting to pop up on the other competitor chains or complementary chains if they work together. Cardano's also really gone hard after Africa, which I like. As a currency for developers, second most populous continent. I wish them luck there. Wi-Fi put out a big update. As always, they've been super busy. Check that out. They've got so many things. I can't wait for the leveraged altcoin trading with Sushi Swap. Powerpool have launched their meta governance token for the Yearn ecosystem. So this is a token like an ETF or an index fund to get you exposure to all the projects that Yearn recently partnered with. Very, very cool stuff. And I just love how you can build the indexes. I mentioned this before. There's 4 DeFi indexes, one by Synthetics, the PyDAO. They've got a couple, actually. They've got a large cap and a small cap. You've got Powerpool, and then you've got the DeFi Pulse index as well by the guys over at Set Tokens. So most of you will remember the little baskets that I did with CoinSpot. We did a DeFi basket and a gaming basket. They were very, very successful. But people thought that they were like an actively managed, taking profits for them sort of thing. And they obviously weren't. But look, we know that these are going to have big demand. So I'm hoping that I can create those gaming indexes for people to track soon. EIP 159, that pull request has been submitted to GitHub. So it looks like Ethereum is going to start burning fees in the coming months. That is going to make it a very, very, or even more attractive store of wealth on top of everything else. Absolutely love this chat with Lynn Alden about Bitcoin, about this multi-trillion-dollar asset, and I still think it can complement Ethereum. So Ethereum becoming harder money doesn't mean that it's the hardest money by any means, guys. So they're still going to complement each other. $1 trillion is a large number. Crypto Quant, this is a cool website along with Sentiment and Glassnode, but head over there. They've just added this ETH2 chart here, and you can see the total value of all this ETH that is being staked. We're talking, millions of dollars that's already flowing into these deposit contracts, and that's just more and more that can't go to exchanges. So we're seeing that in the data. Less coins on exchanges, more going to hodlers, more going to DeFi, more going into ETH2. This is the absolutely perfect storm, along with more demand that is about to explode for higher prices. $76 million, this is the world's first Ether fund, so it's almost like an ETF for Ether. My Ether wallet is actually going to start offering this in-app staking to make it even easier again, and my tutorial is nearly finished, so that will be out soon. WordPress, where we all make our websites, that's got an official Ethereum ad plugin now as well. And last pieces of news here about mining. So this is continuing to be a very competitive space. Core Scientific partnering up with Foundry, so $23 million deal. We've seen hash rate bounce back in China, but we've also seen a lot of these American miners start to sell off different hash rate, look to expand their operations. Very, very competitive space, so I expect hash rate to strengthen. Revolut, they've rolled out 4 different cryptos for buying and selling. We know that PayPal have been absolutely booming. These are the volumes that we saw through Itbit. Look, it has dropped off. So after peaking out at 84 billion, we got down to $12 billion yesterday. And that was kind of one of the reasons why I thought demand was softening. And I was looking for a bit of a correction from when we were at 20K last Monday. A lot of those metrics did show that. And we had a really interesting conversation with Sentiment during the week about how to predict tops and bottoms and find hidden gems. So go back and watch that video if you haven't already. But that's when I was talking about being a little bit of a lone bear. So this was the 6th of December, a week ago now, when we had the record high weekly close. But I was a little bit cautious, and we had this descending triangle. And look, that did play out. I think we end up bottoming at 17.5. We'll look at that in just a second. But I think things are about to turn in a big way. This week we've had Morgan Stanley saying that Bitcoin is winning this bid to oust the dollar. That is amazing. Ray Dalio, he's probably the last legendary investor. I don't think we're going to get Warren Buffett. He's a little bit too old. He did change his mind about gold, but Ray Dalio, once we've got him, we've got Stan Druckenmiller, Paul Tudor Jones. It's just absolutely everyone is getting on board Bitcoin, and all their followers, trust me, with their millions and billions of dollars are going to come. 169-year-old insurance company, they've kicked off their first little dip the toe in the water with $100 million. They manage billions and billions of dollars, and that number is going to go up. They're going to invest more in Bitcoin, and they're going to follow this guy. So Michael Saylor I think he's going to get a tap on the shoulder from regulators, but at the same time, I don't know if technically he's done anything wrong. But they've basically just become a Bitcoin fund now. So money printer go burr. Central banks around the world are printing all this money and throwing it at banks. The only people that banks are lending to are the big corporations. And now you've got the big corporations saying, you know what? We'll issue these junk bonds or this debt, these whatever, warrants, shares. We're going to raise $650 million and we're going to buy Bitcoin. And think about what that does. All the investors don't really care because they know they're basically buying Bitcoin as well. And the shares are convertible, if they make money. And they make money. The value of the company has been going up because Bitcoin's been going up. So it all comes back to Bitcoin. And this is huge advertising and marketing for MicroStrategy. I've got no doubt that that's part of the share rise. But think about these other companies that are going to say, well, look at the spotlight they got. We want to do that too. No one wants to be first, and no one wants to be last. Fidelity's unlocked Bitcoin as collateral. Raul talking about Bitcoin as the perfect collateral. You can now get yield on your collateral through the BlockFis and Celsiuses of the world. But now you can do that through Fidelity. I am so bullish, guys. I think we're going to get to $100,000 a lot quicker than people think. So this morning I sort of counterbalanced my not bearish views, but just I thought we're going to have a little bit more of a correction or sideways action because those retail volumes had dropped off. But the counter argument is that the huge OTC demand is massively just making up for that. And if that's the case, then I said I think we can break out of here, and we've since done that in the last few hours. Let's just bring up the charts here. But I think whether it's tonight or tomorrow morning, I think we are definitely now getting ready to have a big crack at $20,000, and I think we're going to get there. So let's just hide all our different lines, and we can see here that I know we haven't really had much of a correction in terms of sideways action. It really just has been chop. On the daily chart, you can say, sure, this looks like a little bit of a flag now, and we're getting ready to break out. And honestly, it has been declining volume. This is all really setting up absolutely perfectly. Ether even more so. Look at this for a bull flag on the ETH Bitcoin pair. That is about as perfect as it gets. That looks like it's about to absolutely rip higher. Let's measure that move. And this is a good sign for alts. And I think this is possibly even something like the trade I was looking at before. So this gives us a move from around, let's call it 30 to 37. 21, 25% move. It was the perfect storm this week with the US dollar crashing and going lower. That's had a little bit of a bounce. Is that finding a bottom? If it hasn't, and the US does its massive stimulus, then the dollar keeps going lower. That is just a green flag for gold, silver, all these assets to boom. And if they keep drowning the system with money, I do think everything is going to boom more than they want. Careful what you wish for. So guys, to finish off, if you want to stick around and watch the 55-second tour of our headquarters in Decentraland, that's up now. Otherwise, thanks for tuning in. Share this video around. Subscribe if you haven't already. I'll talk to you again soon. And for those of you that want to have a look around and want to attend the launch party, the link's there. The links to the group on Facebook for the launch party details is down below as well. And let's have a little look at Decentraland. So I'm very impressed with the team. They've been an all-star team. As I said, the cost of the tickets is going to help cover all that and go towards maintaining Decentraland and any features you guys want or layout. This is just the very first draft. We're planning on having some very cool stuff in here that I don't want to give away yet. But all will be revealed at the launch party. We're going to have a panel. We're going to talk about DeFi. We're going to talk about my big themes for 2021. With that all-star panel. So there's the rooftop. Bit of a viewing area, maybe the movie screen there for the documentaries, and look, the sky's the limit with the big N frame on the outside there. So I hope you guys have enjoyed that. It's very cool. I'm so excited to get in there and have a play around. Like I said, if you want to come to the launch party, tickets are down below. I'll talk to you guys again soon. Cheers.